Okay, hello everybody, 29th of September, EP is here. Let's get to the price action analysis and do it fast. Now, today I'll be doing different type of video that I usually do. I will try to be a lot more concise and a lot faster on the price action. So if you don't follow me on my Twitter at friendscallmeap. I'm more frequent guest there with my calls. So be sure to check it out. I'm explaining a lot more of my analysis there, so if you want to learn, it will also be a good source for you. And on Sunday, I will make an announcement. I'll be doing a paid content group. Reason being that I'm spending quite some time on Twitter, and why not monetize that effort? Now, the price won't be that expensive. I'm trying to price it in around 60 USD per month, and it will also be providing paid content, not in the sense of the trading signals, but besides trying to educate you and give you a hand on finding a blueprint for a trading system and giving you material and instruments in order to evaluate one. You should understand that trading principles are pretty much the same. People use different indicators, people use different names, but most of the time the principles are the same. There is some nitpicking, some modifications, some spins that people are putting on them when they are using the indicators, but that is coming to your use and your experience. The general principles are the same. Moving averages are based upon the rule of the return to the mean. Price action analysis or support and resistance are based upon the first test, upon identifying key levels of significance. Elliott waves and Fibonacci, well, we're looking at the projections and the fractals. We're looking to recognize patterns, which is very similar to chart pattern analysis, which has an invalidation point and a target, and in case the invalidation point happens, we're looking at another target. Same as with Elliott wave, and you can see there is a lot of similarity in between these trading systems, trading methods, something that I want to explain to people so that they understand the language that other technical analysts use and employ the method and the instrument that they need in order to succeed, because there are that many tools in the toolbox of technical analysis, for the lack of better allegory here. You just need to know which one to look for. So that is the other part why I want to monetize the content, because it will be quite time consuming, and since Twitter is already doing that, why not pay yourself? If you don't want to, the free content will still be on Twitter. I will still be providing some educational examples that I believe are worth your time, and some trades that are important for the market structure direction. However, most of my content will go towards the paid channel, so don't call me a sellout. Emin's got to do what he's got to do. So let's try to go through the daily time frame. Now, RSI, no significance here. We're rejected from 60. Volume, decline in bullish volume, increase in bearish volume. What does Moon Average tell me? Well, not so much. Triple EMA, 55 EMA is proving a resistance here. Does it tell you something? Well, I use 55 EMA as a litmus test. As long as we are below it, I'm looking for shorts. As long as we're above it, I'm looking for longs. However, I'm not buying to resistance, and I'm not shorting as a support, so it's more of a directional marker than the actual call to go into short at any given price point. So what about the 4 hour? The same, we're looking at the convergence here. So before we go to 4 hour, actually we need to go to the 12 hour. Now, here's a concept that some people call order blocks, other people call consolidation breaks. It doesn't really matter how you want to call it. The idea is that whenever you have a consolidation inside candles, which means without fancy terms, is that the price action of the next candle is within the price action of the previous one, we have something that is called a consolidation. And when consolidation is happening, people are waiting for the break. It's like trying to play a breakout, and once that happens and manifests itself, the direction is chosen. Now, there is a difference between chart patterns and volatility funnels, something that I'll be explaining as a free content, not as a total sellout here, because it's something that people have to understand when they're trading, as confusing the two is definitely detrimental to your overall investment. So let's get here to the 4-hour time frame, or even the daily one. Here's the daily one. Sorry. So we had this inside doji within this range. Once we broke above it, we had a price action to 8.4k. So let's think about this from market structure. We posted a higher high above this doji, which told us that the bullish momentum will happen, right? So unless we post a higher high above this doji again, we're not bullish, which happened here. Now let's look at the same principle when we're looking at the 12-hour time frame at the current price action. We had not quite an inside candle, but the consolidation nonetheless. Look here, 2 candles, bearish break. Now we were unable to close above the top of these candles and the weekly resistance. We get rejected very hard from 12-hour time frame here, and until you will see some sort of a price action that manifests like this, there is no reason to go long. Also, why would you risk to go long? There is only like 4% price action here, and you're risking at the current time a more likely travel to the bottom of the range, which is 5%, so it's greater drawdown on your setup, and the break of the yearly lows, as I personally believe. However, until we print a low on a daily close below 6.1k, I am not necessarily full on bearish. So 4-hour time frame, let's look at the zones of significance here. First of all, price action here is the one, 6.6k 41, kind of don't really like it. 1-hour time frame. So whenever I look at the price range, I want to see 3 to 4 hours of trading within the range. So for more than 4 hours we were unable to close in this trading range, which told you short the retest, short the retest, short the retest, put your stop loss here, target this lows. Happened even when everybody was euphoric about this candle. It proved nothing more than a fake out, unable to trade above this range within the next 1-hour candle, so it was more like a 15-minute glory call. Personally, what do I see here for BTC? If I want to go bullish, I'm only looking at bullish trade above 6.8k daily close. That's it, nothing else, and only then I'll have to reevaluate. What do I look on the bearish side? Well, I like to plot channels, so pitchforks were quite fantastic. Here is one pitchfork which allowed me to short this top, just put your stop a little bit above. We broke through this, traveled below, yada yada yada, pretty easy. Then, what do pitchfork help you to do? Pitchfork help you to prioritize, not to prioritize, but to give you directional sense of the price action. Here once again, here's a pitchfork of the descending price action. We broke above, we retested it, we went higher. Now, other price action traders will say, well, you had an order block here, you had a bearish break of these 2 inside candles, and then we never closed below this level, which resulted into us going higher. And EMA traders will tell you, well, we had a bullish crossover here, a golden cross, so went higher and retested. All of that makes sense, all of that is important, and why not use more than one instrument when you're unsure of the price action to see the confluence in between them? That is what pitchforks help you to do. I like to buy the retest of the descending channel if I'm looking for a bullish trade, and I personally wasn't in this one as I was asleep, but if I would see 1 hour crossover here after this price action, I would definitely be looking for a long setup. However, I was asleep, so what do I do next? Like, okay, I missed it. What is my next goal? Well, I'm looking at the next trade. And what is my next trade here? Well, here is my next trade. My next trade is to short. So I'm shorting the boundary here once. It goes below the median line, everything is fine, retest about it, add to the short. What is happening afterwards? Well, it breaks, it loses this ascending channel, and we are going lower. So once again, quite an easy trade in itself. Now let's go into 15-minute time frame and plot the descending channel for the current price action here, and until we'll break through this boundary, I will be looking for shorts as my directional marker. The pitchfork is telling me to look for some. Now I'm not going to short into the support here, however, if I will get some sort of a price action near this resistance at 6.5k, I will be looking to add to my shorts, and I'll be looking at the rejection here and possible price action that makes sense. Now for now, to be fair, for the next few days, I'm honestly looking at some sort of a range. I don't believe there will be any price movement of significance. However, if there will be, I'm still in some of a left for over position from here, and if I will be stopped as a short in profit, at least I will have some sort of a directional target. So I'm on the right side of the market for now, quite happy with that. Let's move on from BTC, but before that, where would I would add shorts? Well, here 6,540 is an immediate suspect, and then 6,580, 70 around here is the next one. First of all, this level has significance. 4-hour EMA is at that level, and 1-hour crossover of EMAs are also happening at that price range. Where would be my targets for the shorts? Well, the low is this range at 6.3k, most likely 6.1k, and then yearly lows. I really believe that BTC is starting to roll over here, and if it doesn't, well, then let's look at the daily time frame. At the daily time frame, here is something of significance. Many people will believe that going above 6.8k here is a higher high, or 7.3k or 8k is a higher high. That's not true. Your higher high only manifests itself after the lag. Apologies. Obviously, after the lags that took out the previous low, which is has a top at 9.8k, is broken. So until we break 10k here, it's not necessarily a higher high. Something to keep in mind. Now let's go to ETH. Now ETH on daily time frame, if it closes below 195, that is very, very bad news. I'm certain that we will all go for new yearly lows if that happens. But for now, ETH is also looking as one of the weakest majors. Now we had our good pump here, consolidation, then triple wave correction, and right now we are sitting within descending channel here. So, you know, nothing much. Where I would target the shorts for ETH, 202 and then 189 as the next target. Now if those fail, I already told you that this daily close below the 194 is suggesting that we will go towards the yearly lows. So remember that when you're trading ETH, be very cautious. The wave count is very difficult here. Definitely not going to try to play around with this one until I get one more pivot. Right now it's sitting at 0.618 fib, so reaction of here is only natural. However, until we will react to the next resistance, which for me makes sense around this level at 219 and 222, so I'm going to try to get shorts in that range. Hopefully some sort of this price action will manifest itself so I can go short it lower, and if it doesn't, well, c'est la vie. But for now I would be flat. You're shorting into the support near BTC, you're short into the support for ETH. Definitely no reason to go short, as indicators are still kind of oversold on 1 hour for both instruments, so keep that in mind. I hope this update was helpful for you, and if you have any questions, be sure to DM me on Twitter. Hope you guys are safe. See ya later.